Okay, so having understand this where the reversal comes from. We eat the 36 EMA. The reason why 36 EMA can hold is because we've had a large amount of work being done from the lower level, and this amount of work can generally data price from eating 36 EMA and 17,000 area to reverse. So I think general rule of thumb, if price is gonna hit 36 EMA and not hold, you have to look at where price was coming from the low, how much work it's been doing at that particular low. Yeah, so we have on the entry trigger and then the entry coming on this one, long-term trade opportunity, and we keep going. Hold on a second, guys. All right, so this is what I would like to share in mapping out the actual origin of the dollar card. So the first move was coming to hit a key monthly order block, all right? And the range of that key monthly order block was about, let's have a look. On this low, which is the last low on the monthly chart, it was about 149 pips, which is not that bad. And let's see where the last dip comes in. The last dip out of the comes in at the price hitting the 38% level, which is around 2016. So these are all strategies that can be included in making sure that you are able to time the entry, and having the patience to know that that timing with the amount of work that was put in this 26 days of reversal in the making, it ended up becoming more or less like double bottom in a way, not a perfect double bottom, not at the equal levels, but obviously when the first test of the monthly order block was hit, what we then see was the rejection, the quick rejection of it, right? Fierce rejection of it. And this is the first point that I wanted to point out, that we have to respect where price is coming from. Price is declining steeply into that order block. We have to understand that the trend is not just going to change immediately from that decline that is coming all the way from a very, very high level. As much as we know what we know and what will happen are two different scenarios. So the key thing that we know is we have a monthly order block in this area. Then what will happen is, are we going to turn around this monthly order block into a key trading opportunity to actually find the real area of where we need to execute, so that we can use this same strategy for all our older trades as we are approaching certain key levels. Okay, So the first thing that happened is we hit the monthly order block, and then we kind of trade slightly above this high. This is another key reference. Prices come into the monthly order block, the last high, price retested it, give you some kind of um, there's a particular word for this, inducement, that it's likely going to start to go up, and that was the last high, and then we saw a sell-off. In fact, if we measure to the peep, the last high will be 21.93.6, and then this probably is 22.03, which means that area of psychological number of 2200 played a role over here. Psychological level of 2200. Let's look for it. 2200, and yeah, that actually played a role over here for rejection with just about 3 pips. And then from there, this high was known before. This monthly order block area was known before. This rejection can be very tricky, but obviously because we know we are hitting monthly order block, this rejection might be expected, and then the next target will be using higher time frame, 12-hour time frame, the next high around there. All right, and then what then happen is we find key rejection again that leads to about another 197 pips, good area to enter, area of equal high sweep, right? Price has become more expensive over there above the previous high, and then we make a new low, right? And then this is where I have this depot. So the first equal high sweeps and reverse back down, first state of the MOB followed by rejection but no reversal, preliminary demand. We see that buyers are inside this order block, and they were even able to hit the previous level of equal highs, but the trend hasn't actually changed. Deeper test of monthly order block occurs on this particular move here, and the low becomes the second reference, break of the previous low, which is this particular low. So trend is still down. The number 2, trade below it is the newest, cheapest price to buy. We have to continuously understand the essence of a market facilitation, and that is to buy the cheapest price if possible, and then sell the highest price if possible. So in this range, the highest price possible that smart money are going to be looking for is not any price here, it's not any price here. A previous reference level of high, trade above it becomes more higher, and then sell off to make a new low, which is over there. So now we've made a new low, price becomes cheaper. Order block in it can either lead to change of character or a retest of next equal high and low. So this is the preliminary demand that we've seen. This is the secondary test. All right, this secondary test now, we see that we move up higher. We see have it 12-hour doji having good 12-hour Sugera of this buy opportunity, and we couldn't take out the high, and that becomes a key thing for us to know that, okay, the trend is still down, okay, and then over here we have another block test that retest equal high and low, test of equal high and low without creating new high, right? It's a further test of more bearish pressure. Okay, so over here there is another block which obviously push this price higher, although it's not a very strong order block because we couldn't trade above this high. all right, coming back down. As price is coming back down, we know inside that there's a order block that will potentially push the price higher as well. So that push the price higher to another level of equal highs and low. So this another high area, price rejected the high area, right? That is what I'm trying to say over here, that there's more bearish pressure. Trend hasn't changed, and we are kind of closely hitting the 12 EM, sorry, the 36 EMA rejection level over here. So the integration of the retracement level of 36 EMA lead to a further deeper rejection, all right, which shows us that the trend is still bearish as price gradually retrace and form a new low below this particular low. So we're still bearish, but obviously we are bearish into order block again, the monthly one. So each and every new lows that we are attaining on the monthly order block is a challenge for us to be thinking of, okay, we are inside the order block. If we make a new low, that's an opportunity to look for buy opportunity. This was the cheapest price to buy, which is around the psychological level of 1.200. But obviously, it would take a lot of experience and aligning things together in terms of structure to bring the chaos into a meaningful sense. So the one meaningful sense that we have is the monthly order block. The other meaningful sense that we have is this new low, and trade below the new low inside the demand zone of monthly order block. It's equally an opportunity to say that this is cheap as well to buy. So we kind of move up a little bit, and when we move up, we created another failure. And the one key thing that I wanted to note is we've been to this area before, which is a 12-hour order block, but did not create a new high, right? And over here now, we've traded below it. We kind of find rejection, and then we traded back into this other reference. So this other reference could have been the second opportunity to enter equally at 1.2026 area. But it will take a lot of balls and understanding and preparation and understanding of the skill to take this first trade or second trade. The third trade that could be taken will be to now start to see things much more clearly when we break structure, and then we're able to break 36 EMA coming into 12 our order block that is present over here, right? So we've kind of break structure. We've changed we've had change of character, and that change of character is solidified by failure to make a new low, first entry, second entry, and then now we over here is where the confirmation kind of coming. We eat 12-hour order block, all right, and the change of character has already occurred, and that is what I'm using as my early entry trigger. If we are able to break this, that becomes a trigger for me, and the key entry will be to understand that price will always retrace in certain conditions. So we hit 36 trade above it into this 12-hour order block. So apparently we haven't had any trade above this level. So, and then that retracement, which obviously is a trend move. That's another key thing that I want you to pay attention to. Trend is in the formation over here. So we have a low, we have a high, we have a higher low, and then we have a higher high. So this retracement comes into 12-hour order block somewhere over here, and then that retracement was able to generate a new high. Okay, so if you can follow what the trend is saying on higher time frame as well, it can definitely help the decision making progress. So the trend has started to form from this higher low and that's the first leg of a trend. The second leg of a trend is this movement and that retracement. And this, in fact, as much as I call it an early entry, right? This, in fact, is not just an early entry, it's an entry that has a first leg of confirmation in place, okay? So it's not as risky entry as this. The most risky entry will be this one, but that is the highest rewarding entry. The entry without much of a confirmation was the one that comes to give us the right shoulder of more or less like head and shoulder pattern, which means we have a potential left shoulder over here, the head over here, and then the right shoulder, and the trend start to form. All right, so we have looked deeper into how the trend change over here, okay? And the trend change, the first leg was seen clearly. The second leg would have been an opportunity to enter. What was I saying over there is break below the cheapest price, initiates opportunity for new buy ups in a monthly order block, and also a potential head deeper trust. So now we are now have a deeper trust. So if you're following, the first key thing is to know where the monthly order block is and look at how price is developing inside the zone, and then look at various that we taking into consideration the lows, the highs that are present over there. If the highs are not taken out, we still understand there is further bearish pressure. If the highs are hitting the 36 EMA and making a new low, we still understand that, and that's a further bearish pressure. And then if we reject from that new low into previous areas of highs, and then that previous areas of highs was able to send the price back down, okay, but couldn't create a new low. All right, so that is the first sign of market failure, right? Failure to make a new low around previous same level, of failure on the left shoulder, anticipation of potential right. Haven't seen a deeper head below previous low, a deeper head below this previous low, initiation of failure to go further low after deeper trust test. That is our number 4 key levels to read and learning how to read the chart. Preliminary demand zone, huge level, and use fibs to find 50% to discount zone. All right, comes in here, and there's a 12-hour order block on this particular candle. Our entry took 26 days of work and patience to reveal the larger trend we are in now, right? And obviously another entry trigger comes in over here, and we couldn't find a deeper retracement. And the key thing is, by the time this key entry is coming in, now we have now break the 12-hour cross of the moving average. So if we look at here, this is where we have the cross, which is around 120-100, and that is key. But if we do a replay, sort of, let's say we do a replay, and obviously with this replay, we want to see precisely at what price did we have that cross, you know. Right, so there's no cross here. We deep into that order block, further deep into the order block, and that is our entry candle. Right, more deep for a new entry, another entry candle, opportunity to enter. Wow, we have that break. Okay, so we have this break, and this is the key thing that I wanted to point out. By the time the break is actually happening, the moving average is cross is happening at the same time after the move has already occurred. All right, so that is first visual confirmation using some sort of indicator. And you will be thinking that, wow, this move that is creating this potential entry opportunity, this is what I want us to understand when it comes to moving average cross as an entry indicator. Is it would have taken the largest part, about 150 pips has already occurred before we now see that happening. And that is not even the only thing. We have to understand that our first entry, this is the first day of our first entry. Our second entry was after 1.5 days. Our third entry was after 6 days, fourth entry after 8 days, and then the moving average cross occur after 10 days. All right. So 10 days of, which is practically 2 weeks of trading before the moving average occurs. So if you understand the scale and learn the scale, you can give yourself a potential possibility of 10 days earlier entry, and then obviously when you're taking the 10th day earlier entry, you will be having a much more about let's see, about 170 pips worth of risk. Okay. And then this business is all about risk and reward. So 170 pips worth of risk can put someone off to want to take this cross if you don't have enough capital in your account, or you would then use it to take a smaller lot. But the most important thing is understanding where that turn is taking place. Okay, so you can go and look at other charts and look for all the key monthly order blocks and the kind of reaction that will be happening around them. So if we continue to see the play and the actual entry after the break of this highs, multiple eye break, break of structure over here, break of structure over here, break of structure over here, comes in at that key retracement, which is that particular one, right? And those are, that's when the price then take off. Okay. And the price take off from there. So let's investigate that and be like, when we have this break, we wait for a whole 12 hours worth of retracement, but which is a good time back into the previous level of high, so we can definitely wait to have the break and then know that, okay, the break has occurred. I come back after 12 hours, see what is happening. Oh, break has occurred. Let me set my orders, pending orders around this previous highs that was break. Previous high was over here, previous high was over here, and then leave it. And that is the trade triggered, and you are then in this trade for a longer time. All right, so it's a swing trade opportunity that you're looking for in a monthly order block. I hope all that is clear. If you need a particular picture of this demonstration, then I can take a picture. And what I wanted to show was not just that, but where are we now? So from that particular move that we've designed with so much work, we then start to see us breaking 12-hour EMA. The move was so bullish back into huge volatility levels, right? And price comes down. But when you are reaching huge volatility levels, you have to understand that price will not just travel. Price will find a reason to play around. Look at this deep, even almost looking like a kind of reversal that's occurring, another head and shoulder reversal pattern, and that reversal kind of fails somewhere, which if we want to take a look at it, If we want to fib it, we can definitely have a fib and see, oh, the larger trend has unfold, and then now we are waiting for a potential possibility for getting in after much confirmation. That will take number of days as well. So let's see. So that entry of the discounted entry coming again at 70% level. Okay, so let's look at the risk involved. So 79 pips of risk involved from prices dipping down after creating this lower high. 79 pips of risk involved. Obviously, if you want to take the trade at all this level, you wouldn't know, because I'll probably will be looking at 78.6, but another reversal pattern occurs after we've seen the sell-off. This little reversal pattern, I don't know if you can see it. It's another thing that you can train your high speed and work out what exactly is happening. Okay, so a much larger trend unfold. We have this new high, lower, higher low sort of, and then higher high, and then higher low sort of, and lower high with rejection in this previous area of high around 633 oversold region. So the first key oversold region leads to a major deeper retracement back to 70% of the move that's already occurred. So in this 70% region, we don't know whether it's going to give us 70%. We don't know whether it's going to give us 61%. We don't know whether it's going to give us 78.6%, but we can then understand the kind of pattern that is going on over here. All right. And that pattern is another held and HSH, which is head and shoulder pattern. This low, which is the first preliminary demand at 61.8, secondary test, and then much more deeper tests and price retrace. And the highs that we're having will start becoming important. This area of high, that will be our trigger. Okay, trade above it will lead to a trigger, and that trade above it occur basically. Let's say, let me delete this. You can understand your early trigger from that. Okay, and then that early trigger occurs when candle hits that area 2400, and the retracement that you will see is gonna come inside another order block. So you can use the smaller time frame of 4 hours to note the other block, but that particular other block will be somewhere around there. Let's look at 4 hours to see if we can find it. Okay. So the key thing about the 4 hour is we have a key level of this rejection. There's a single print rejection, and that single print rejection add another confirmation to the fact that we have an aggressive buying coming in at here, and that aggressive buying shows on this candle, and price dips significantly down into it, probably as a result of any other news or data that come up, right? So, and that's it's this particular order block, and also trade potentially below some key levels. So I haven't seen that this become a key level of risk, 123.07, and then we have another probably less than 10 pip, 12300. We actually test the psychological level of 12300 before we take off back again. So that begins the taking off. and the takeoff kind of rise until, let's go back to our 12-hour. The takeoff kind of rise into the same key high level at the same time as well. That key high level from where the takeoff occurs due to tiredness in price. We are approaching a resistance. Every retail trader is selling a resistance. We sweep slightly above it, which is good. And then we start to merry-go-round again before we have a major dip again into these key levels over here. All right, so the same early trigger that we have, price come back to test that area, which you can see that some of the things that's happening over here is not random. And because how come we are able to come and test the same key levels which has been identified before, and we eventually make a new high above it, that will make a new high, another rejection, come back to the high, less rejection, trade above that high now, deeper rejection. All right, you can see the flow of the order when we hit that high of where we found our first rejection. We have deeper rejection. We come back to that high. We didn't kind of have much deeper rejection compared to air, and then now we trade above it significantly. We have another deeper rejection to key levels of 63 EMA over sold area, and now price is retracing. So if we are looking at this, what is likely going to be our next level or our next area of entry? Well, one thing that's already happened is we've broken multiple structures, right? Which means we have a couple of break of structures. We are looking at potential opportunity to see if we can get a trade that comes back inside there. Okay. Or a trade that will come back inside there, which is not as much of a deep retracement. Okay. Those are the next entry levels on this particular order block. Those are the next key entry levels for CAD. So to play this now, we've equally seen a break of a key levels of rejection, which means all the stops above here are now triggered. Okay. If this trigger stop is going to lead to further buying pressure, we can see a deeper retracement into this level or into this particular level, or timing the 200 EMA again can be a good area for us to start looking. So there's no need to rush. The dollar card has been giving us a bullish signal from a very, very long time. That bullish signal hasn't been invalidated at all. So looking at it for a buy opportunity is just a very natural thing to do. So I will be looking for a buy opportunity over here on this high. If we retrace and find some kind of rejection on those highs, on the lower scale is going to be down over here. Right. So if we look at this last leg of move, we can equally see a couple of waves forming: 0 to 1, 1 to 2. Let's say this is 2 to 3, 3 to 4, and 4 to potential possibility for a 5. All right. And after that 5 forms, we have this retracement which didn't come to break this, and that kind of shows a very, very strong bullish wave. Or we can look at it like 0 to 1, 1 to 2, 2 to 3, 3 to 4, and 4 to 5, deeper retracement, right? And then a new continuation. after that deeper retracement. So if we are going to time this, we can time it with a Fibonacci, but Fibonacci timing is not yet ready because we haven't seen another second retracement. But from here already, we can start to look for possibility for a Fibonacci timing into all this zone at the same time as well. But yeah, I think the most key thing for next week is to watch development. Early entries are going to be over here, right? And then obviously deeper entry down into that, and then much more deeper entry down into this. So let's look at the risk in question. If we take a trade over here, for example, we're gonna have 277 pip worth of risk. If we can withstand that, then why not? Or that is in worst case scenario. In the bear case scenario is we take a trade over here, all right, and then we put the risk down to 99 pips, okay? So let's look at various scenario, various risky scenario that may eventually pay off. So we want to take a long trade, and we will anticipate potential possibility for taking a long trade over here. And the stop for this particular long trade might be around, let's say, the low that was there before, which is this particular low, and we may sweep it. Right, so 31.39, give you like a 10 pips below that in case we sweep it. Okay, that's one scenario. The other scenario is to take a trade if the price hits 36 EMA, which we can see over here. We have a couple of rejection of such 36 EMA, right? And this 36 EMA trade, the risk associated with it will be below this particular low, which we can sweep at the same time as well. We've swept this low over here. Right. And then we produce another block over here. So I'm expecting over here can hold, and the MA would have moved above it. So we can be looking at a trade opportunity and risk below. That's the second one on the 36 EMA. So the risk over here is just about 170 pips, right? The first risk is about 51 pips, and the other case scenario, which is a much more patient scenario, if it occurs, is the objective is to target potential possibility of 1,000 pips plus over here. Let's say the objective is to target, that's the 78.6 region over there. So let's look at different scenario. This particular scenario will give us 934 pips, all right? And if we don't want to miss the trade, we can use it as an opportunity to enter. This particular scenario, which we may lose out on, we target 834 pips, but because of that 834 pips, it still makes sense to take it. And this particular trade, which is going to be our haze setup, will be potentially worth about 1,022 pips. So what I'm saying in essence is this is a risk reward ratio of 8 to 1. If we get it, a risk reward ratio of 16:1 if we get it, and then a risk reward ratio of 5:1 if we get it. So well, let's think about it in terms of this. If we risk £100 on this trade, we are going to make £880 basically. If we risk £100 on this trade, we are going to make almost £1,600 on this. Is much riskier. And if we risk £100 on this trade, okay, if we risk £100 on this trade, we are going to make about £550. All right. So having said that, I think this will be the end of my analysis on dollar card. I hope you enjoy it. If you have any question, please do not hesitate to ask, and then please do like and share this video if it kind of change your perspective to trading. Thank you.